Dr. Copper versus the economy versus commodities. Hello, I'm Rich Pawson, CMT, Chief Analyst and producer of Critical Point Podcast, and it's March 24th, 2021. Okay, this is a monthly chart of copper prices, and I'm going to give you a snapshot first, then we'll go to some of the details. At any rate, what the model is suggesting is a long-term bottom occurred in March 2020, right at the same time or the same month as a bottom for the US stock market. And then the bottom for the economy in terms of various recession type indicators was a few months after that. And of course, we know we're still in recovery for the economy, but copper has just soared to near record highs back in 2011 or so. At any rate, what the model is saying is it's time for a minor long-term top. That means it's a top that occurs several times during a decade, okay? And it's a forecast for lower copper prices into sometime next year, and it's probably going to be late next year. So that's the forecast, to be bearish now. And what would be the first piece of evidence we're on the right track is the violation of this month's low, okay? So when it takes out that low in the futures, then it should continue to work lower. Now, the thing is, it could be a slow decline for quite a while, and it could be choppy. So we could have somewhat elevated high prices, something trading like in this range here, and then eventually it may evolve into a range in the 360 on down to maybe even $3 or 280 or something like that. Okay, so that's our forecast for copper itself. Now, that's our snapshot. So if that's all you're interested in, fully understand why you don't want to watch the rest of this podcast. But now let's go into greater detail. Many people believe that copper is a good economic indicator. And it is at times, and at other times it kind of fools us that, oh, we got strong copper prices, it must be a great economy. And likewise, when they see lower prices, they think it must be a poor economy. Well, that's not so. Sometimes copper is going to trade its microeconomic, its own economics, okay? Now, what occurred recently was that there was a 3-year business cycle top in June of 2018, a related bear market, meaning we were producing too much. But it turns out 2018 was when our macroeconomic business cycle model said time for a recession in the US, time for a recession in the world. And as it turned out, the world did go in a recession 2018, 2019. The US started at times, and then with Federal Reserve intervention and some of the faith of businesses, government, and especially investors, they backed that up. They made it self-fulfilling prophecy. It worked, and so it kind of confused the picture in 2018, 2019, whether or not we were really going on to recession. Then, of course, the virus recession showed up, and we had no choice. The Federal Reserve couldn't fix that. And so we had the collapse, and we got a demand disruption, a collapse, a crash in demand. This was then followed by a crash in supply in the sense that demand came back on board, somewhat at least, but the supply side was not back to work, literally. They were having problems of ramping up the supply. And in the end result is it created a net bullish scenario from 2020 into this year. Now, there's a lot of talk that we're going to have far more inflation due to all the money printing. Well, that's probably true. I am a super cycle bull into next decade for inflation, perhaps for the rest of the century, okay? And we're going to see rising interest rates that go along with that as a way of countering some of that inflation. But the thing is, nothing moves in a straight line. And I'm thinking by next year, we could actually see some easing back of inflation, but it's possible we'll see higher labor inflation, so we won't see the easing back of inflation, but we will see the easing back of commodities, because I actually have more than copper in terms of the number of commodities that are actually due for a setback next year. And the stock market will probably make a similar cyclical setback next year, okay? But all of that for the stock market economy are in much larger trends for this decade, moving higher. So we want to be bullish the economy. We want to be bullish the stock market. But the point is, we want to be cautious of commodities. They may only be bullish this year and the next 2 or 3 years, and then not so much later in the decade. Maybe not at all. So for this copper market, I think it is going to work lower now into next year, and it's going to be demand kind of fighting a little bit of trying not to pay more than they have been. And they're going to settle down that they're building their inventories and that the supply side will get back to work and increase the supply. Now, granted, there's some discussion out there that we're so far behind on production that the mines probably can't keep up with it over the next few years. Well, maybe that's why we're going to see higher copper prices in 2023, 2024, and perhaps firm prices this decade relative to some of these major cycles and super cycles. But it doesn't mean copper keeps marching higher into next year, and I just don't believe it's going to do it. But the first piece of evidence I need is a violation of this month's low, and then the next piece of evidence, better evidence, is a violation of last month's low. But no one wants to wait for it to drop that much to call some kind of top, okay? So I'm being aggressive and I can be wrong. Now, what if it actually takes out last month's high? Well, that would be a sign that this bull market is still intact and a sign that the 3-year business cycle is still bullish. It has not yet turned bearish. And we'll keep throwing some darts this year, but I think it's going to top this year. And ideally, it should have topped last month. So that's my scenario for copper. And a decline in copper prices going into next year is not a sign of a poor economy. It's microeconomics working. As long as copper doesn't crash back to 2.4 to 2.2, there's a chance that the economy is growing, business is going to move forward, okay? So I'm a firm believer copper is a good economic indicator. You just got to know when to use it. And my theory is copper is giving us a warning that we can have lower commodity prices by next year. Some of those commodities may stay up into next year, then down, but some of them may top this year. So I'm also going to watch crude oil this summer to see if we can come up with a similar cyclical top. Hope this makes sense to you and been some use. Now let's go a little greater detail of what are we doing with these cycles? Well, it turns out that our model can label all price fluctuation. Every one of these little twists and turns has a label. And if we convert this to a weekly chart, we're going to see even more twists and turns. It will label all those. And when we go to daily, it'll label all those. When we go to intraday, it'll label all those. But at some point, you will find some on a very super fast pace that we really don't study and work with, and the labeling drops out. In addition, when we go the other way, we can say, what was the move for the decade? What was the move for the century? Believe it or not, we can label that. Some of those super cycles have to do with how we do business at levels of the generations of the population and their impact on the economy and how they run the country. Fascinating stuff, much better insight than standard cyclical analysis. And you got to keep in mind, fundamentals really only explain 50% of price fluctuation. The other 50% is called X fundamentals. It's your behavioral finance, behavioral economics, but this kind of modeling picks up on that X fundamental, making it even more valuable, more important. At any rate, there we have it. I'm bearish copper until proven otherwise, but I don't believe that's a sign of economic problems whatsoever. Manage your risk relative to analysis of others, and have a great week.